Yeah,
This
thank
call
you.
is now being recorded.
Yes, please just be mindful of the fact that the call is being recorded. So what we are doing at the moment is that we are looking at the position of business partner Zulu due to the concern that today the robot did not collect profits for him, and then he did some editing, and then positions are taken, and then I'm just showing him that his positions were taken in close proximity. So we need just to be mindful of that. It's important that we allow the market to move. By just placing an order and another order, that does not mean the market will move. No. So sometimes when the market is not moving, also don't take action, because we want to buy low and sell high. You don't need to place a lot of calls along the same price range, for instance, along that same price range, and you find yourself that you've placed so many calls along the same region in terms of price movement. And by the time when market moves, it will leave you up there. And then when it plummets, we realize that the gap is huge, for instance. So, but we're going to discuss this. I'm going to demonstrate it on a live chat so that you see exactly how these positions are. And then I hope this one won't take us long. So position number 7, the average price is 107,555 US dollars and 61 cents, right?
Yes.
I'm just actually noting this on my notepad on my site, and then we're going to then plot this information on a live chart of Bitcoin USDT for you to see exactly what transpired here, so that you have a clearer view of what is literally happening in terms of placement of margin calls. At the moment, I would like us to take also, our focus is going to be on position number 6, position number 7, and position number 8. Just so that we don't have to go through to all of them. And we're going to plot horizontal lines in line with those prices, and for you to see them on a live chart and to understand the gap between the last, rather your overall average price, and also even the average prices of these individual calls. You see call number 8's average price is, how much is it?
107, $564.24.
Yes, so it means position number 8 entered into the market, or was entered by the bot, or was triggered or executed whilst Bitcoin price was trading at $107,564.24. So this was the last position. Now we are due to place position number 9. But before we place position number 9, I would like us to actually share this info nicely on a live chat. I want to show you these positions, and then so that you see them and nicely. We can have them in colors, you see. We can have position number 6 in maybe yellow, and then position number 7, we can have it maybe in orange, and then maybe the very last position, that is which must be the first one to come out. Maybe we can have it in blue. So these are positions. Position number 8 is going to be in blue for you to see it on live chat, and then you will see exactly what transpired. And it will help you exercise patience when the market is not moving, so that you don't actually have congestion of orders that you are just pushing in simply because you think you'll collect more profits. No. We only collect profits according to market conditions, not according to our desire or emotions and so forth. No. It's market is the one that pays you. So when the market does not move, you also do not take action. Observe, trade what you say and not what you think, for instance. Because the prices that we are putting, the quantities that we are buying with, are really not going to change or shake the market. We Yeah, but we are retail traders. We'll have time to talk more about this, and you'll understand exactly where you're going. Excuse me.
Okay.
Getting into the session with I'm just quickly check so that we look at this together, and then we'll come back to you, business partner Zulu, and we will open position number 9. But after we understood what is going to be happening on the live chart, I'm going to be on trading view for this, and then it's going to shortly make sense actually, so that in future you are really not under pressure to just be buying and buying. No, allow the market to show you something better, a better direction, and so forth, so that when you move in, you literally have an understanding of what is happening. I've just joined into the session using my smartphone here, and then I'm going to be sharing the screens, and then you just confirm, please, when you see what I'm sharing. And then we're going to tradingview.com. Leader Zulu, can you confirm what I'm sharing?
Okay, it's just something disturbed me here. Okay.
No, go to
I don't see it.
no, please go to Google Meet.
Okay, go back to Google Meet. Google Meet. On my Google Meet. Okay, Google Meet.
I mean, go to Google Meet so that you can see I'm sharing screen. And Michael, can you please confirm if you can see what I'm sharing?
Okay. Yes.
That I'm sharing?
Yes.
Yes, I can.
Okay, sure. So that you can see that we're going to go to, because I know you're trading from Binance, Leader Zulu, and then you can see here, this is the coin you are trading, Bitcoin, Tether, and then this is Binance, and then spot crypto. That's where we are at. So I'm going there straight so that everything, the candlesticks align and so forth. I'm just deleting what we don't need. I wonder where are we now in terms of time. Okay, well, this is a daily time frame. I would like to go to, this is Bitcoin that you are trading, and then this is Bitcoin that you are trading. So let's go to a daily, rather 15 minutes time frame. You see, these are even my favorites. So we're on the 15 minutes time frame. We're on the 15 minutes time frame. Can you see that?
Yes.
Thank you.
Yes, I can.
Thank you so much. This is 15 minutes time frame, and this is what transpired today. You can see that the market has been falling. Actually, I would like to just put it like this. So now what I will do is I'm going to plot call number, I will start with call number 6. I said we're going to use a yellow color, and then call number 6. We're going to use a yellow color. I use a horizontal line. We'll have time to talk about these things.
Okay.
For it, we want a yellow color for it. There I've plotted it, and then let's put the coordinates. I don't know if Leader Zulu, do you still remember the coordinates? That is the number, the price for that. It was 107. I wrote it down, remember, on my notepad. For number 6, call number 6.
107, 635
Yes.
$0.85.
Yes, 635.85.
85.
Sorry, something happened here. Yeah, 107,035 0.85.
5.
Yes, thank you. This is what it is. There it is actually. So we are even going to let's go to a daily time frame so that we can see it nicer, because it's way far actually, but it's good. It's good that we can see it because other calls come after the yellow. They come below the yellow color there, meaning call number 6. So now let's now plot call number. We're going to plot call number 7. And then what color did we dedicate that to? We said
Orange. Orange.
Orange.
Thank you. Yes, we said orange. Thanks for concentration. So orange. We draw orange. Okay, orange can be this one. Yes. This is 107,555.
555.
Yes. Can you see it? That is call number
7.
Number 7. Now let's go to call number 8. Now we go to call number 8. We're only focusing on those 8. So I'm in 3 calls, so to speak, and then that will be good. And then call number 8, we said the color is going to be
Blue.
Blue.
yes, blue. So that I want you to see the importance of patience. When the market is not moving, you also don't worry. You know, just hold your position. You are holding your position. That's it. You know, and let's go to, we said it's going to be blue.
Yes.
Yeah, that's blue. So now look at where these are, maybe later. Okay, now can you see that currently, can you see that all your calls under 15 minutes time frame, you can see that all your calls are here, all of them. But the market fell to down here. This is what the market currently is at. Can you see this gap?
Very bad.
Can you see that?
Yes.
So one was impatient to do what? To just put money. 3 calls are taken, and all of them are around the same price level. You know, and then I will just quickly show you by coming here, somewhere here. Look, even these calls, they were not taken today actually, because this dotted line, this vertical dotted line, it was the end of yesterday and the beginning of today. You see, this dotted line, going down, vertical line. It's a breakage between yesterday and today, and it shows you that even the market was trading way below these prices. You see, these prices that you see here. Yellow one, $107,635 and 85 cents. The blue one, $107,564 $24, and the orange $107,554 and 61 cents. So can you see all your prices are clustered around the same price range, for instance? It means they were all placed in close proximity, and it's not good. And if you check today, the reason why no profit was collected today is because Bitcoin did not actually come down. You see, let me just quickly go to a daily time frame. Let's look at it from a daily time frame, and then we'll understand something. I'm on a daily time frame.
Okay.
This is a daily time frame. Sorry for that. It's just an issue of network. But yes. Now I'm just showing you that this is how the situation is. This is how the situation is. All your calls, there they are. All of these calls, all those 3 calls, they were placed more or less around the same price range or price level, and then this is what happened yesterday. The market went up, that red candlestick there, the market went up and down again. And today, the market actually dropped. You can see this. The market went down. The market went down. It's just trying to recover a little bit here. It's just trying to recover a little bit down there. So this is what happens. All your orders are around this range. They are up there, and the market is no longer up there. The market is down here now. This is where the market is. If I'm to make a screenshot of, yes, I think this one even will show things better. If you look at this, look, the price of Bitcoin, this is where Bitcoin is now. Bitcoin is around here. This is where, let me use a different color here, maybe a blue one. Yeah. Look, this is where Bitcoin is. This is where Bitcoin is. Bitcoin is now trading at $355.98. And then your orders, you entered the market up there. When market was trading around 107, around 107,000. Within 107,000, you had already placed so many calls. You had already placed so many calls, as if somebody promised you that from here the market was going to go up. So it's like you were convinced that there was going to be a pump from there, but the market now left you up there, and the market is down here. That is depreciation. That is depreciation. That is loss of dollar value of the asset. It's the market actually declined. The market went down, and it left you up here. So today, if you check today, market has never gone to 107,000. It has never gone there. It was only yesterday, and it didn't last also. The bears pushed the price downwards. So today, your region of 107,000 was never reached. That height of trading around 107,000 was never reached. So here, I'm just showing you that your calls are pegged around the same price level, and here it is. These are the indication of yellow, blue, and orange. That is to show you that your orders, all of them, are filled within the same price range. Actually, 107,000. No 108, no 106, no 105, no 104, no 103, no 102. You understand? No, now market is 101. So it means so many calls were placed up there, and then and these are the sub positions, 6, 7, 8. Now, so you can see exactly what transpired here. There may be an opportunity for the market to begin to pump, for instance. The market can pump and produce better, but you'll still have to wait for some time here, unless if more calls are now placed around this area, with hopes that Bitcoin is not going to break below 100,000. Bitcoin is not going to break below 100,000. Maybe a stronger support can be formed here, and Bitcoin begin to bounce off. The bulls can push back and report their presence, so that you begin to milk this market from the lower lows. So this is what actually transpired, and then I hope it shows you exactly the danger of placing a lot of calls around the same price level. If perhaps one could have checked just how actually a day before yesterday here, how the market responded. Yeah, you know, one could have perhaps exercised some caution to say, you know what, I can't place so many calls, you know, when market did what it did yesterday and a day before yesterday, and then look yesterday how things happen. That is why today the overall performance of BTC is 100% bearish. It's a dump, you know. The price actually dumped, and that is what it is. Hence, one, you are temporarily trapped here. The price will return. It's possible that it may not go back to 107 till before next year, for instance. You know, it's possible it may not go back to 107 before next year, but it's possible also that it can go back there, provided a lot of buying orders will push the price back. You know, that is the correction of this temporarily dump that we have seen, where you are trapped at. So now you can see, imagine if these calls came like this. Imagine if these calls came like this, you know, if this call came like this, where your yellow one, I'm just indicating, maybe your yellow one was there. Let me, yes, if your yellow one was there, I'm showing you, and then let's say, and then another call, which is blue, your blue one here it is, let's say it was somewhere here. Look at the gap in between, and maybe, and then your orange color, your orange call, maybe it's around here. You know, there's no way in which you wouldn't have seen some profits. You see the gaps in between are significant, for instance.
Yes.
You know, the gaps in between are significant. If you check this gap here, it shows you that there's a room for more. You know, if you check this gap here, it shows you that there's room for more. And then if the market recovers, if the market comes from down here and then it goes up a little bit, you'll know that your position number 8 here will go into profit. Will go into profit faster. Unlike clustering all your calls in one price range, within, let's say, within 105, you place so many calls there as if Bitcoin will not drop to 100,000 or to 99 or to 98,000. It can go and leave you there. So don't put your money around the same price level, too much of it, unless if you are sure that the bears have lost strength and the bulls will pump, you know. So this is just one of those things that we need to be mindful of. Because if you are to check also, when we use Bollinger Bands leadership, you will see that Leader Zulu there, that you are on the upper part. This is the upper part of, this is an area of overbought, you know, and this is the area of oversold, you know. So a lot of calls, maybe you can place them at the lower band here, not up there, because it shows you that this asset is actually overbought, oversubscribed, and people will now dump. And when they dump, it will go down and it will leave you up there. You know, it will leave you up there. So bigger calls, maybe you can place them around the area of the lower band of the Bollinger Bands. You see, the middle line here, it shows you an area of moving average. You know, that is the moving average of the price, you know. So up here, we can't place big monies there. No. It's actually a moment to exit. It's a moment to exit because it shows you that this particular asset has actually been oversubscribed. You know, the buying pressure is so much. It means the bulls have pushed the price so high that they are beginning to get exhausted, and the bears will certainly push the price downwards. And you see how nicely the bears are responding to this. You know, so that is just what it is. And I hope at least you've seen something there. That is the reason why actually the price is where at the moment is where it is at the moment. But now, with that being said, let's check on 15 minutes time frame. Looking at the time, when you look at 15 minutes time frame, yes, looking at 15 minutes time frame, you are now able to see something here. You're now able to see something. So at 15 minutes time frame, it's a good time to actually enter your position, because on a smaller time frame, you can see that there's going to be a bounce off, and that's where we're going to make money. You're going to respond to this maybe with $50. You see here, the price has fallen so much that the bulls have much strength to respond now. It is at the lower band. The lower band, this is the green one. The moving average is the blue one. And the area of oversold, according to this indicator, is the red one there. So now the price has fallen so sharp. Now, if you are to enter here, this position is most likely and easier to go into profit, for instance. So if you enter here, the price has high chances to react, to go up, to pump from here. A minor correction that will happen for the dump, and then you will soon go into profit, for instance, with a position like this. And then we're going to do this with $50, and then we're going to be trading with caution. So let's I would like you to please share the screen on your side. I don't need to stop sharing, but I'm just quickly going to do that, because please share the screen on your side so that we now work on you responding to what transpired and to take advantage of what is happening in the market now by going in with a better amount. Share screen, and then we're almost done with the session. Leader Zulu is to share the screen. Are you still with us?
Yes, can you see it?
No. Okay.
Not yet. But I can see that. Okay, I can see that you are presenting. But it's not reflecting yet. Stop sharing and repeat. Stop sharing and share again.
Okay.
Is your phone open, the screen?
Yes, because I'm in Royal Queue now.
Please go into Google Meet and share screen.
Okay. Google Meet. Let me see.
We'll have time to talk more about the average price and the current price. I didn't do those now, but at least I just wanted to show you, now you're sharing the screen, we can see that. Let's go into Royal Queue. What we're going to do is open position number 9, and with a better amount. We have seen under a daily time frame, and you'll see the difference between the average price of position number 9 that will come in compared to what is already there at the moment, and which shows also patience. So now what we're going to do is go into the calculator. Go into your calculator.
Okay.
Say 50 divided by 12. That is $50 divided by 12 of first buying amount is 12. Can you see that is
4.1?
Yes. Let's make it 4.2.
Okay.
Yes. Let's say 4.2. Because for you to see, say delete what you have there, and say 4.1.
Okay.
Delete, yeah, say 4.16.
4.16.
Multiplied by 12.
Okay, 12.
Yeah, can you see it's $49 point something? So that's
Yes.
why we just rounded off to 4.2. So now let's go. It's fine. We're going to use 4.2. I'm looking at the time. We need to cruise. I have the next meeting actually. Let's go to Royal Q. There's a meeting coming. So I don't want to be late. So now what we will do is this. You go to
The page.
there's a network issue. Yes.
Okay.
Let's take us to transaction page.
Okay.
And then go to, this is recorded, so you will watch it time and again, okay? So go to trade settings. I'm surprised why your phone is, I think there's an issue with network.
I don't know what is happening. Okay.
Just go to transaction page again. Unable to resolve host. There's something happening there. Click again. They say unable to resolve.
Okay.
Okay, there we go. Trade setting at the bottom left. Trade setting. Don't scroll, please.
Okay.
When I see something, it means I can see it. And now let's go to margin configuration.
Okay.
Thank you, sir. And then now let's check below call number 8. Go down to call number 8. Yes. Now, can you see that we have call number we have call number 9 that is waiting for 1%. I don't know. Maybe did you switch off margin calls?
Margin calls. It went off when I was trying, and it just went off.
Good. So what we're going to do now? It's okay. Do this. Make call where there's ninth call where there's 1%. Make it 0.1% so that it's going to go in immediately. And then where there's 0.5 times, make it 4.2 so that it can go in with $50. 4.2. That is 4.2 times 12. It's going to be $50 that goes in. Where there's call number 10, where there's 2, make it 99%. We just want to block it like this. I don't want us to go into many things for now because of time. We're just 99 is okay. Just 99.
99. Okay.
Yes, we're just saying that we don't want the robot to buy until Bitcoin has fallen by 99%, which is not practical. So now click show.
Okay.
Yes, and then go to distributed. Go to distributed and take profit allocation. And then go to call number 9. That 5%, at least make it 3%. I mean that 1% for 9, yes. Where there's 1% for 9, make it 3% minimum. You see, it means you want to collect minimum 3% of that $50. You see, we are hoping for that to happen. You know, if it goes into profit 2% or more, or you can just come and change it to 1% so that profit can be collected. But we'll have time to talk about this. So go down and save. Go down and save. Sure. And then save that. Now, can you see margin call drop? It shows 0.1%. Can you see that?
Yes, I see.
Which means it's about to go in. But switch on margin call. Check. Switch on margin call. Yes, switch it on so that the robot can now go in. Let's go up. Let's go to the upper part of this. So we are waiting for call number 8 to come in. So, I mean, for call number 9, we see already 8 numbers of calls are there. Call number 8 went in, but you and I know that call number 7, call number 8, call number 6, all of them, they went in around the same price range actually, within 107,000. You know, so many calls went in. So we shouldn't place calls in so much close proximity when we trade with a tight capital. Now, we should allow the market to breathe before we go in, for instance. We should make rather better amount of percentage drops so that there's much difference, for instance, in terms of value for your money. You know, you want to buy quantities much cheaper. You can't buy quantities around the same price range so much, you know, around 107, and so forth. You know, those that we put in close proximity, like 0.1, 0.1, is for first call, second, third, and the fourth for the whole warehouse. And we have a reason for that. But from position number 5 going up, no, we should trade with
distance
level of precaution then. So now, at the moment, margin calls have been open, and then we are going to then check. Can you go a little bit down? There's something we need to check there. Can you see that call margin trigger price is 107?
Yes, 107, 455.
Myself, why is this not updating? It shouldn't be that, because the price is not there.
It's only one.
Yes, the price is not there. Can you go up? Can you go up the screen? Okay, I don't understand why. Look, market price is 101 currently. Current price is 101, 101,478. So now let's do this. Let's go. Click on trade setting. The next call to go in is call number 9, right?
Yes.
So yes. Can you go up a little? Yes. No, that's okay. I was just looking at the other parameters and so forth. So this is okay. We are fine with what we are seeing now. Let's go out with a back arrow. I'm just asking myself, why is your bot not updating return? Oh, it has updated.
It's updated now.
Yeah, I think this was network related. Because call margin trigger price, there's no way it can be up there at 101. I mean 107. We want to buy around where the market is, which is 101. So can you see that is 101 here? No, that is no. The call has been taken already, because that is less than
number 9. Number 9 is
so happiness now. The call has been taken. So whatever that small, less than $1,015, it's just that abnormal margin call drop that we put of 99%. So this is happiness. So it means even if you forget to switch off margin calls, call number 10 won't go in anytime now. So can you please click on sub bin? Click on sub bin.
Sub bin.
Now go to call number 9 and look at the difference between that and the others.
Too much.
Yes. Can you see?
Too much.
Yes. Call number 9 has entered at around 101,545. So you see $101,545. So with $50. So we're looking at minimum 3% to make here.
Okay.
And it doesn't mean you must wait for that 3%. You can scalp. It's possible that it can go in by 2%. When you see that the market is trading way above 101,000, you can just go to distribute and take profit allocation and change that 3% to 1%, so that the robot can collect whatever floating profit there may be, for instance. And then you can now be looking at the candlesticks from the Bollinger Bands on the smaller time frame as an intraday trader, because you want to collect profits within a day, for instance. Now, that's what you're going to be doing, trading with caution, because you know that your capital, does not grant you that luxury of just opening too many calls in close proximity. We don't want to do that. Value for your money. Buy bigger quantity after the market has dropped significantly. And this is what we see. This is Bitcoin. The drop that happened there from 107,000 to 101, it's huge. And now, if you're to go up, please go up the page. And then looking at return rate, there's been a reduction from what it was. I don't know if you can still recall that now. It's minus 3.54% or so. And then can you see the average price has also dropped to 105,000? Can you see that?
Yes.
which is the advantage of buying more quantity at the lower prices after the market has fallen to a certain significant depth. You see, this is what happens. This is what trading is all about. And that's where we say exercising patience, it's important. You know, it's important. Sometimes you need to apply some brakes and say, I'm not going to buy now because the price is not good. Have that take it or leave it mindset. You know, this is your money. Put it when it matters the most. You know, so now you bought more quantity, and this is what it is. And at the moment, the market there, it is 101,000 and then 467 or so. And you will see very soon the market will break above this. The market is going to pump, it's going to pump, and then you will see 102, maybe 103, and you know that you will be floating in good profit when such happens. So now for you to know around what price will 3% be, take us again to please position number 8, supposition number 8. Position number 8. Or number 9, I beg your pardon. It's 101,000 and then 5.35. Take your calculator, please.
Okay.
I'm just showing you, we don't need to do this manually, but I just want you to have this understanding because it's very good. You see, say 101,000, 101, 545.35 plus 3%.
Plus 3%.
Put percentage sign there, it is. Yes. Can you see that when the market trades around 104,000?
Yes, 104,591.
Yes, $104,591.71. The robot would have collected profit for you.
Okay.
You see, and this price is before your whole position goes into profit, because your average price for the whole position is 105,000.
Yes.
Before the whole position goes into green, you know, position number 9 would have collected profit for you. So, which means even when it's around 2%, where does 3 put 2?
Okay.
Look at that. So even around 103, 103 and 576 and 35 cents, you would have gotten 2% of your $50. And you can scalp that. You can scalp because sometimes those 1% can happen several times before 3% is actually realized. So you can be scalping that. So this is how actually you trade through sub positions before you wait for the entire position to come out. And you are leveraging on this using sub-bin mode, real-time settlement. So this is very important. We'll have time to dwell more on this so that we understand it from different perspectives. But for now, please, let's end this session here. We will have Q&A session offline, okay?
Okay. Thank you very much, my
It's a
leader.
pleasure.
Okay.
Okay,